Rob, thanks for taking some time to join me in the studio.
Thanks, Owen. Thanks for having me.
We're going to be talking all things tax time. And it's always great to do this. We do it at least once a year. Sometimes in the past, that was with Kate, my former co-host. And now you've been lumped with me. So hopefully we can make it through unscathed, mate. Obviously, you're here representing the ATO today. Let's just start at the most simplest level. What does tax time mean to the ATO?
Yeah, so, and I think our core function or our core purpose is to collect the revenue and the tax for the Australian public to fund essential services like healthcare, education, defence. So tax time is really important to us in the overall scheme around thinking around what our purpose is. And it's a time when, a lot of individuals and other taxpayers, have to finalise their tax for the year. And so it's also a really good opportunity for us to be able to engage with taxpayers and help them to get their tax right the first time they lodge, so they don't have to worry about us coming and asking them questions or them having to redo it later. So it's really, I think, from our perspective, a very important role. It's a bit like grand final. Like there's a lot of teams that we prepare for it year round. Tax time comes around. Big period for us. A lot of people are calling us with questions or looking on our website. So a really good just chance to connect to make sure people understand what their tax obligations are and what they can and cannot claim and what they need to include in their return at tax time.
I can imagine the grand final analogy probably suits. It's a big time of year for everyone at the tax office. One of the things I like to do is just keep an eye out for like any news around this time of year or even after June 30th around what's kind of important this year and what we should know. So I guess for anyone listening, what are the things that you would want them to know if they're listening to this, they're hearing directly from the ATO? What are those things?
Yeah, so for individual taxpayers, Owen, there's three things that we're focused on this tax time. And why we're focused on them is because they're areas that we do see people get it wrong. And so we want to make sure that people understand kind of what they should be doing at tax time around these. So the first is work-related deductions. And work-related expenses. So when it comes to deductions, look, we've honestly seen some pretty wild claims. We've seen a truckie who's tried to claim their swimwear when they stop off between trips. We've seen some other interesting ones. A sales consultant who tried to claim feed for their pets. So we've seen some funny ones. But I think really why they're kind of extreme and a bit funny and, you can have a laugh. It is just that element around reminding people that there is a serious element to that and just reminding people they can only claim an expense on their tax return if it's a work-related deduction that actually directly relates to the income that they're earning for their job.
Yep. Okay.
The next one is working from home expenses. So last tax time, we had about 10 million Aussies claim a work-related expense, and about half of those claimed a working from home deduction. Obviously, post-COVID, a lot of people continue to work from home. So just reminding people there that if they are claiming a working from home deduction on their tax return, they actually need to be carrying out their work duties at home. So like just not taking the occasional call or checking the email after dinner. You actually need to carrying out your functions there, and you need to have records. So we want to make sure that if people are using the fixed rate method, which means they can claim 70 cents per hour for every hour they work from home, that they're keeping the proper records around that. And if they're using the actual cost method, where they need to calculate the actual cost of their expenses that relate to them working from home, that they've got the right records and receipts there. And the third one is omitted income. So we're just reminding taxpayers they need to include all sources of income that they earn during the year on their tax return. And this includes things like, your kind of side hustles. So, ride sharing, if services through apps, if you're earning income, that all needs to be included in your tax return at tax time.
I remember when the working from home stuff, obviously during COVID, became a big deal. I know a lot of our community paid attention to that, and there's plenty of literature on the ATO website, which we can link to, because people should be aware. And obviously from your numbers that you just talked about, it's a huge thing. So staying focused on those three things makes a lot of sense to me. So there's this thing which I want to ask you about is the tax gap. And how does the ATO focus, how does the ATO's focus areas work to reduce that?
Yeah, so the tax gap is probably sounds like a very tax technical term, but really what it is, it's the difference between the amount of tax that would have been paid if everyone had got their tax return right and was fully compliant, and what actually we collect. So that's really just what tax gap means. And why tax is paid voluntarily through the pay-as-you-go withholding system, we're concerned that some taxpayers are kind of overclaiming deductions, or they're not including income that might not occur through, the withholding that your employer withholds every pay. So work-related expenses do continue to be the single largest contributor to the tax gap for individuals that aren't in business. And so that's accounting for about $3.5 billion a year. So it's not small money. And the key areas we see there relate to poor record keeping. So people just aren't keeping the records or receipts that they need to be able to show that they spent the money and that it relates to their work. And that's the second one. We're seeing a lack of connection between the expense and the income activity that they're earning. And then the third is incorrect apportioning claims. So if you've bought something and you use that for both work and personal purposes, only claiming the amount that relates to the income earning your work-related element on your tax return. And that's kind of why we're focused on that again this year and just trying to make sure people get it right at tax time.
I think we were talking off air about how important it is that people understand the role of the ATO and what the ATO just wants people to get it right the first time. And that's what this is, right? Because it's good for everyone. So you mentioned some wild things there before with like the truckie claiming swimwear, which I couldn't imagine how that computes. What are some of the common mistakes that people make, and especially when it comes to deductions, which is obviously the hot topic for most people listening to the show this time of year, and how can we all avoid them? Yeah,
so it's those things around poor record keeping, so not having the right records or receipts, a lack of connection between the expense and your income, and not apportioning those claims between your work-related element and any private element. And to avoid these mistakes, there's like 3 golden rules that people should follow if they're going to claim a work-related deduction. So the first is you need to have spent the money yourself and not being reimbursed by your employer. The second is that expense needs to directly relate to the income you're earning and not be private in nature. And the third is that you need to have a record, which is normally in the form of a receipt, but for other things like working from home, there can be other record-keeping requirements associated with that. We've tried to make it easy for people because what you can and cannot claim can be dependent on your occupation, that we've produced over 40 specific industry and occupation guidelines that help people understand what they cannot claim at tax time, what records they need to keep, both for this tax time, but it's actually really good that people have a look at those now because then they can start making sure they've got all their receipts and records in place come 1 July for the next tax year as well.
Great. So you mentioned things like keeping records, apportioning, and the nexus between like the income and the expense. Can you share some of your tips for keeping records? Because that's obviously a really important thing for admin, for everyone listening to this.
Yeah. So I've probably got about 4 tips here that are probably worth remembering. The first is to keep all your receipts. So in most cases, the records you need to keep are written evidence from a supplier, like a receipt. Now that has to include a few things. It's got to include the cost, the name of the supplier, the product or service that you're purchasing, the date it was purchased, and the date on the document that the document was produced. So you might also need to keep additional records or receipts for motor vehicle expenses, like a logbook. But have a look at the ATO website. Lots of information there around, depending on the deduction you're claiming, what you need to keep. The second is that a bank or credit card statement, generally on its own, isn't enough to be able to substantiate that. We do see this mistake a lot. So people will just show us their bank statement and say, well, I spent the money, but that's actually not in line with what's required to be able to substantiate that deduction. The third is you need to keep your records for at least 5 years from the date that you lodge your return. Can't throw them out after 6 months. And the last one is records fade. I don't know about you, Owen, but I always find the taxi receipts, like they seem to fade after about 2 months. So you can keep your receipts digitally as well. And there's a My Deductions feature on the ATO app, which you can keep all your receipts in one place. And you can share those with your tax agent, or you can use them when you lodge yourself at tax time. So it can be used for both ways. So that can be an easy way to keep all your receipts in one place digitally and not worry about where did I leave the taxi receipt from 4 weeks ago and has it faded.
Rob, so you could like take a photo of the receipt, store it on the app, and then you could share that with your accountant.
Yep. So there's lots of information on the website about the ATO app, and we can put it in the show notes and
cool.
My deductions tool. I think the key thing is people can keep their receipts physically or digitally, so it's up to them. As long as the best thing to do is keep them all in one place, so you know where they are, and that can make it easier at tax time.
For sure. That's a really good tip. So one of the things that always gets brought up, and a lot of our community are big on this, which is the kind of giving back and the donations that we make. Like personally, I do a lot of those, and some of them are definitely not to charitable organizations. Some of them are. So what are the rules that we need to keep in mind around deductions for donations to charities?
So to be able to claim a deduction for a gift or donation, Owen, it needs to meet 4 rules or 4 conditions. So you need to make the gift or donation to a deductible gift recipient, which is sometimes referred to as a DGR. And you can easily check this by using the online ABN lookup tool. So that's one way to check that. It needs to be money or property that you donate. Now, that property can include financial assets and shares, but it does need to be one of those. It must truly be a gift or donation. So it can't be I'm giving you something and expecting a benefit or something in return. And it must comply with all the relevant gift conditions. So they're the 4 rules and conditions to follow there. And also just a reminder that you do need to have a record or a receipt of that gift or donation as well.
Yeah, great. It's one of those areas that every tax time it comes up, people are always trying to go back in their records and see what they've given to. And it's such an important thing that we encourage anyone to do is if you have the means to help others, but just keep those records. The same rules apply by the sounds of it.
And have a look at the ABN online lookup tool to make sure they are a deductible gift recipient.
Yeah, great. So you mentioned the truckie before, which is it did make me laugh. I know you get asked this a lot, and I've figured may as well ask it here as well. What are some of the craziest deductions or potential deductions, like air quotes, that you've seen?
Yeah. So I'm going to rattle a whole list off. Thermometer, chest freezer, deep freezer, sandwich press, treadmill, massage chair, steam iron, dishwasher, Nintendo Switch, coffee machine, coffee grinder, home TV, steam oven, and juicer. They were all tried to be claimed by a company director as working from home expenses. I think the coffee machine itself was worth over $7,000. So, not a small coffee machine, a bit nicer than the one I've got at home. So obviously they're all private in nature, not deductible. We had a sales consultant who spent over $50,000 in work-related expenses, which included things like when we asked them feed for their pets, some potting mix, some dumbbells, obviously so they looked good, top-loading washing machine, obviously once again all private in nature. We saw a mechanic who tried to claim his deep fryer, and someone in the fashion industry who tried to claim over $10,000 in luxury clothing because they had to go to some events and dinners and they wanted to look nice, and that's considered conventional clothing, right? So you can't claim that. So we do see some kind of interesting claims. Like most people, and these are the outliers, right? So most people try to do the right thing and understand what they can and cannot claim, and so it's just a reminder around those three golden rules. Yeah, 3 golden rules, like it. It's always just good to hear those types of things. And probably there's probably people listening with a few alarm bells being like, wait a second, that fruit juicer? Yes, think again. And I think it's just a good reminder, Owen, not to rely on what your colleague at work might tell you they've put on their tax return, but actually to seek advice from a registered tax professional, a legal professional, or have a look at the ATO website to understand what you can and cannot claim.
Yes, absolutely. A lot of the people that listen to this show, Rob, are investors, whether they're just getting started or they're 40 or 50 years in. Some of the people listening will have rental properties. When it comes to apportioning for that, what are your tips there?
Yeah, so it's a good question, Owen. Apportioning is something we do see investors get wrong with respect to the expenses that they can claim that relate to them earning the investment income around their property, and then the personal elements. So we see things like incorrectly apportioning ownership interest as well. So where there's multiple owners, and that can be joint tenants or tenants in common. How that plays out in terms of what you need to include in your tax return is different. We have periods where people have used the property themselves. So obviously, you can't claim expenses for that period when you're using it. And we see rental property loan funds being used as well as part of that for mixed purposes, so part private and then part for the property, and that's another area we see. And so, for example, we're seeing an increase where people are drawing down on their investment loan or property and using part of that for personal costs, whether that be kids' school fees, new car. And so then that loan goes from being purely for an investment purpose to being what we call mixed, part private, part for earning income. And so therefore you need to apportion it. So you need to then apportion the interest that you pay off. Obviously you can't claim the capital on your return, but the interest elements of that you need to apportion between the amount that relates to the income that you're getting from the investment property and the amount that relates to the personal expense. And the other thing there is you need to continue to do that for the life of the loan. So, if you've taken out a $500,000 loan, you've used $500K of it for private purposes. Once you've paid the first $500,000 off of the principal, you can't say, okay, well, all the interest now is for the investment property. You actually need to keep that apportionment going for the life of the loan. So they are some common mistakes we see. And so, just reminding people that they keep good records around that where they are. And we collect a lot of data from a number of sources, including state government authorities, rental bonds, sale transaction data, and landlord insurance data. So we are able to kind of see where some of these mistakes are being made and reach out to people and ask them to kind of substantiate why that's happened or explain and try and help them to fix it.
Yeah. I've actually heard of, not necessarily in this context, but I've heard of instances like that happening where it's just that, like you said, substantiated, which that's the system that we have in this country, right? Where it's like a, self-reporting and then there may be questions.
And I think, a tip there is we know a lot of landlords use a tax agent to lodge their tax return. So just reminding yourself, if you do use a tax agent or you're doing it yourself online, just to think about, has there been any change to my loan arrangements this year that I need to think about at tax time?
Yeah, we have a lot of people actually that do things like, and are really worried about this type of thing with things like debt recycling, property investing, all of those, they get freaked out by this idea called mixed loans, or so it's called online. So it's, again, just getting the right advice and giving them the right information, because your accountant may not always have all of that information. So keeping everyone up to date is really important.
And probably the ATO has an investor toolkit, which has a number of fact sheets on it, which can help property investors understand some of these issues in common areas where we see people make mistakes.
I've actually got more questions on that in just a minute. But so I'm not a property investor. No shade on that, but maybe one day. The question that is here that's probably important to ask is, what's the difference between repairs and maintenance expenses versus capital expenses for rental properties, and how do we claim them? Yeah,
so it's not always easy to get it right when it comes to this, but categorising your expenses will help you kind of claim the right amount in each tax year, but also then when you sell the property. And so a common mistake we see is initial repairs on rental properties. So, most new landlords might buy a place unless it's brand new and find there's a few jobs that need to be done. So it could be a fresh coat of paint, a few new roof tiles, replace the cracked ones, maybe replace the floorboard. A lot of people think that they are repairs, and therefore you can claim it in the year you spend the money. However, as these were issues when you purchased the property, then those repairs are considered to be actually capital in nature, and they're not deductible as repairs and maintenance in the year you expend it. But you actually need to, they're called capital improvements, and therefore you need to apportion the cost of the expense at 2.5% a year over 40 years. So that's one area we do see people make mistakes. Obviously, once you've got tenants in, general wear and tear, like replacing the cracked tile or maintenance can be claimed in the year of the expense, but there is a difference depending on if that repair, if if that issue was there before you purchased the property, as opposed to it's just been while you've had tenants in there.
Right.
So that's one issue that we do see landlords make a mistake, and just to be aware of. Improvements or renovations as well are capital expenses, and they're also generally claimed over 2.5% a year for 40 years. So that's things like if you do a building extension, put a garage on. A good example is like instead of just replacing the one or two cracked tiles, you decide to rip the whole bathroom out and put a whole new bathroom in. That's capital in nature, so you can't claim the whole expense in the year you spend it. It's 2.5% a year over 40 years. But also remembering to keep good records of that, because that can also factor into your cost base when you go to sell the place, if you've got any expenses that you haven't fully depreciated.
Okay. So if you sold before 40 years or whatever. Yeah, okay, gotcha. I do remember learning this now in my tax uni courses.
There you go. Something stuck. Good to know.
Something stuck, yeah. It's all coming to the surface now.
All flashing back.
Yeah. So how about then with depreciating assets, so things that go down in value?
So depreciating assets are assets that kind of have an effective life, and so you can claim the decline in value of those over their effective life. So that can be things like your oven, pool pump, carpets. Now the effective life of those depends on the asset. So have a look at the ATO website. They've kind of list out how long the effective life is for each of those. Once again, good idea to have a comprehensive list of these and the claims of the depreciating assets over time. So you've got all that. That helps you get your claim right for the year that you're lodging. But as we talked about before, any unclaimed capital expenses can be considered as part of your cost base when you go to sell the property. So it can impact how much capital gain or loss you make on the property and how much tax you pay. And we've recently updated our investor toolkit to include a bit more information on this to help investors to get it right.
Cool. It sounds like, again, in particular with this and property investing in general, record keeping is like the next level as well. It's just like keep records of literally everything. You never know when you might need it. You mentioned the investor toolkit, which is something that we've spoken about off air, which I was keen for you to just explain to people that are listening or watching, because I wasn't aware of how extensive the resources are on the ATO website, in particular, this type of thing. So can you explain what the investor toolkit is?
Yeah, so the investor toolkit is just essentially a toolkit and information we've provided for people to be able to help get their investments right when it comes to things like earning income from property, shares, crypto. So we do update it. It's a good source whether you're doing your own tax return, lodging yourself, or lodging through an agent. You know, it allows you to understand what you need to keep and some of the things you need to work through and some of the mistakes we kind of see. So tips, it includes a number of tips for rental property owners and some of these common mistakes we've talked about. Guidance on capital gains, not just for your property, but for shares and crypto. What to do if your rental property is damaged or destroyed, which occasionally happens. How to handle crypto transactions, but also how you might want to manage your investment income through the pay-as-you-go installment system. So look, highly recommend you having a look at it, even before you invest. If you're thinking about investing, sometimes we find people, throw records out that they probably should have kept when they look at a year or two down the track. So whether you're currently investing or thinking about investing, it's a really good resource to be able to use, and it's on our website.
I think one of the key words there for people listening was also crypto. That's been one that's been in the news for the last 5 or so years, and it still seems to be gaining in popularity amongst people in our community. So, yeah, go and check this out, the Investor Toolkit. When I first discovered it, I was like, this has all the answers to the questions that I was looking for. Because sometimes you go onto different sites and you're like, I don't know, there's 2 different answers to the same question. Whereas this is the official ATO one, so it's great. Yeah,
and I think your point there around looking for advice is a good one, Owen. As we said, ATO website, registered tax agent, legal professional, that's where you should be getting your advice. Best place to get your advice from. Yeah, great.
So Medicare, this still confuses people, and I feel like there needs to be a name change, but in the absence of that, people should know the difference between these two things. Can you explain the difference between the Medicare Levy and the Medicare Levy surcharge?
Sure. So the Medicare Levy is a payment that most Australians make in their tax return to help fund the public healthcare system, and that is automatically calculated when you lodge your tax return.
Okay.
The Medicare Levy surcharge is different. Is an amount you pay based on your circumstances. For example, you, your spouse, your children don't have appropriate level of private patient hospital cover. You earn above a certain income. So if you have an appropriate level of private patient hospital cover for yourself, your spouse, your children, or your dependents, then you don't have to pay the Medicare Levy surcharge.
I always find a bit of a lack of understanding of people's knowledge here is also having that health insurance for how long and these types of things. There's plenty of literature on the ATO website that explains how that affects your tax return too. So we can link in the show notes to that sort of thing. So Medicare Levy and Medicare Levy surcharge, two different things. They sound very similar, but there's more information online. So go and check that out before you make an assumption. So who is entitled then to the Medicare Levy exemption?
Yeah, so some individuals can claim an exemption from paying the Medicare Levy.
Yep.
So you need to consider your circumstances and know if you're exempt before you lodge a tax return. So to be able to claim the full or a half Medicare Levy exemption, if you meet certain medical conditions, like holding a Veterans Gold Card, you're a foreign resident for tax purposes for part or all of the year, and you're a person that's not entitled to Medicare benefits, or your spouse or your dependents are also exempt, and so can't claim benefits. So people not entitled to Medicare need to apply for what's called a Medicare entitlement statement from Services Australia before they claim the Medicare Levy exemption. So you can apply for a Medicare entitlement statement from 1 July through your MyGov account or through using the Services Australia online application form. But this can actually take up to 8 weeks. So if you are lodging a tax return and you are entitled to get a full or half exemption for your Medicare Levy, and you need to get that statement, just factor in that 8 weeks to your timing. So get onto that early in the tax time.
I think most people that are in the Rask community, Rob, are familiar with the idea of having to wait to do their tax return. A lot of them are ETF investors. A lot of them have things going on that they need to sort out with their accountant or otherwise. And so waiting for a little bit of time is perfectly reasonable. So just for folks, that's the Medicare Levy exemption. It's good. I always like that the Veteran Affairs Gold Card is here because, the ex-service people is really important to our country. And I think that was why the Medicare Levy was introduced, is for us to help cover the cost of health, right? So a good one. In terms of like us moving towards talking about lodging, tax returns, income, all these types of things, when is the ideal time to lodge a tax return to ensure accuracy? Because that's what the ATO wants, and ideally that's what we want.
So if you're lodging yourself, Owen, lodging your own return, we say wait to at least late July. And the reason we say that is it allows us to collect information from your employer, banks, private health insurance, dividend income, government payments, and pre-fill that into your return for you. So it's all there when you lodge. You just need to check it's correct. You need to check if you've got any other income. So, you've sold crypto, you've got an investment property, include that in your tax return. So it just makes it easier for people to get it right when they lodge the first time. Also, the ATO app it can kind of let you know when your pre-fill's ready. So another reason to use that. The other thing as well is if you know you're going to get a bill and you're lodging yourself, delaying lodging a tax return actually is not going to give you more time to pay your bill. So the due date for your tax debt, if you lodge during tax time, in most cases is the 21st of November. So whether you lodge, in August or you lodge in October, if you owe a tax bill, the due date of that is still the same.
Yeah, okay. So just delaying it doesn't factor in. It's still got to be done. Yeah, okay.
That's right.
Yeah, okay. So that pre-fill information that you mentioned is really important. You mentioned some of the ways that takes effect in bank accounts, shares, all these types of things. Why is it important that we wait for that?
Just because we've seen over a number of years that people that rush to get it done typically are more likely to make a mistake than those that wait for pre-fill. So it just means you're less likely to make a mistake. And so we've included a lot of that information in your return for you. Just makes it easier. obviously need to check that. You need to add anything else into your return in terms of income for investments, or even cash wages is another one you need to make sure that's in. But then it's all there. It just makes it easier. And we do see people making less mistakes when they wait for that to be included in their return already.
I got to admit, that's so helpful, because I have I'm just trying to think of how many different banks I use for different things, like my mortgage, different savings accounts. It's just so much easier. So you mentioned prefill, which is obviously really helpful, right? But I guess, I'm assuming the answer is yes, that's right, but are there any income amounts that we need to declare ourselves if they're not pre-filled?
So you need to include all income during the year that you've earned for that financial year, whether it's pre-filled or not. So whether that is full-time, part-time, that's cash payments, that all needs to go in your tax return. You need to declare the money you've earned in other ways as well, just not from your job. So things like crowdfunding, sharing economy, investment income, online activities from content creation, foreign income's another one. And the other one is some government payments are also need to be recorded. And there can be reasons why prefill is not in there and can be incomplete. That can be that the organisation that's giving you that income hasn't provided us with the data yet. It could be that we could not match that to your record, or it could be that the information that was provided to us didn't pass all the quality checks that we need to make sure that we're only putting in income into your return that is actually yours.
Mm-hmm. So even if the prefill looks like it's there, just double checking everything, because you might sign up as Joe Blogs in this bank account and Joe whatever in that one, even though they should ideally match. There may be instances where the things don't come together at once.
Yeah, so you just make sure you check that everything looks right in terms of the income we've pre-filled, but also then ensuring that you include something else if it's not there.
Yep, for sure. So this is an interesting question to ask the regulator of the system, so to speak, is when should people consider doing their own tax returns versus going and seeing a licensed tax agent?
Look, that's a personal choice, Owen.
Yep.
It's up to each person whether they want to lodge on their own through the online services or through an agent. So there's a choice people can make. I think if you need help with your tax return, though, we do have resources online that are available. And I talked about before, we'll automatically try and include information and pre-fill in there to make it easier for you. And you just need to check that's correct, and if you're missing any assessable income. Now, if you earn $70,000 or less and you have simple tax affairs, or someone you know might have simple tax affairs, you or they might be eligible for a free assistance program that we call Tax Help. So that's generally from late July through October. And they're ATO trained volunteers that help people to lodge their tax return using MyTax. And they can also assist with non-lodgement advice. So if you don't actually need to lodge a tax return, or you've made a mistake, then they can help with that, or lodging a refund for franking credits. So you can use or people might be able to use the Tax Help program. There's information on our website about Tax Help. So that can be something. If you've got more complex tax affairs, then you can consider using a registered tax agent. They can help you with some of that complexity. Just make sure that they are registered with the Tax Practitioners Board, and you can check on the Tax Practitioner Board website. We can put a link in the notes if it's easy to there so people can check that. But you still need to substantiate your deductions even when you're using an agent. So it doesn't mean that it becomes the agent's problem. You're still responsible for what goes in there. And the ATO app can help you do this by saving details and photos of your receipts, and then you can share them with your tax agent at tax time. You can also email the information to your tax agents as well to help them. We've mentioned the Tax Help program before, but listeners may have also heard about our Tax Clinics program. So this is a nationally funded program that offers free advice and support to eligible individuals and small businesses who are unable to access tax help or tax advice from a registered tax agent due to financial, social or personal challenges. And so these tax clinics are available across Australia at various universities and TAFE campuses, and there's information on our website about the tax clinics as well.
So this is really interesting, Rob, because I didn't know this existed. So there are avenues for people to explore if they have those simple tax affairs and they earn a certain amount of income or less. So that's pretty compelling.
Yeah, and so the Tax Help program is available. as well as the tax clinics program. The tax help program, there is an income threshold of $70,000 or less, and there is some other eligibility criteria around that as well in terms of it is for simpler fares. So people can look on the ATO website, information about who's eligible, but then also how to book into a tax help volunteer as well.
Yeah. What about the tax clinics program?
So the tax clinics program offers support and advice for individuals and small businesses who, for various reasons, can't access tax advice due to whether that be financial, social or personal challenges and aren't represented by a tax agent. And these clinics are available across Australia at various universities and TAFE campuses, and in fact recently have expanded. So once again, we'll put some links in the show notes to those as well.
For sure. So one of the things is like people get up to the point of lodging, they're happy with it. How can they track the progress of that? And like, I guess that's just the question from me is like, how do they check the progress?
So the quickest way to check your progress is the ATO app if you've got it. So encouraging people, have a think about the ATO app. Definitely can track it that way, or by logging into ATO online services through your MyGov. Now remember, when you lodge tax return, it normally takes about 2 weeks to be processed. Calling us the day after you've lodged it isn't going to speed it up. So people think if they call us, we're going to like hit some button and it's going to speed it up. It does need to go through a range of checks to make sure it's right, and we think it's right, and the processing of it before obviously you get the refund or you get your bill. But the best way to do it is ATO app or ATO online services through MyGov.
One of the things that people, if they're doing it themselves, or maybe even if it's going through a registered tax agent, is the possibility of a mistake, because it does seem quite complex. What happens if someone does realise that they've made a mistake?
Yeah, so if you've made a mistake or left something out, like these things happen, right? Like, no one's perfect. We all make mistakes. So if you do that on your tax return, whether you've lodged online or through an agent or even on paper, you can request an amendment to your tax return using our online services, which you can access through MyGov. I think the thing to remember here is wait until we finish processing your original tax return before you request an amendment. If you actually request an amendment before your original return's processed, it can actually take longer.
Okay, good to know. So just sit and wait and then go back after the assessment's done. Okay. So I've got a couple more questions for you, but one of them is that money, online, this is the realm of like a lot of activity in the good ways and sometimes in the bad ways. So I'm thinking about things like scammers, text messages, emails. We've all seen those types of things appear across the traps. What's the best way we can protect ourselves?
Yeah, so the best way people can protect themselves is just by keeping their personal information out of the hands of scammers. So scammers often pretend to be the ATO and ask for personal details to gather the information, especially at tax time when they know everyone's engaging with the tax. Like, they know a lot of people lodging, they're expecting something from the tax office. So we do see an increase in scams. People seem to be the ATO at this time of the year, but we also see it year round. So people need to be vigilant year round around this. It's just not a tax time thing. They send emails or SMSs with links, whether that be a hyperlink or normally to kind of a fake website to try and steal your information. So if you receive a notification, it's important that you just stop and think for a second, check whether this is really the ATO contacting you. So we recommend you kind of stop. So don't share your information unless you trust the person and you genuinely need to give those details to the person. Take a sec to check. So just ask yourself if this message could be fake, right? Never click on a link or hyperlinks or a QR code directs you to an online portal. If you need to put in your MyGov account, you need to go to MyGov, put it in the in the website bar at the top yourself. Don't click a link and protect. So if you do give up your information, you think it's a scam, and you've given up your information, contact us as soon as possible if something feels wrong, or if you've noticed some suspicious activity on your ATO account. Like, we are committed to keeping the community as safe as we can, but that does require people to also be vigilant themselves.
Yeah, for sure it does. There's a lot of great government resources around too, around cybersecurity, scams and these types of things. So plenty of resources for people to lean on. Just be really mindful of who it is that you're communicating with. So I've got 2 final questions for you. We've mentioned a lot of resources, which we'll include in the show notes for this episode in particular. This is such an important time of the year for people to pay attention to their finance, their tax, and their admin, I guess. What are some helpful resources that you would call out?
So some helpful resources, Owen, the occupation guides on our website, if we go back to working from home deductions, can help people understand what they can and cannot claim, what records they need to keep. The My Deductions tool in the ATO app is a really easy way to keep all your records in one place and be prepared for tax time. The Investor Toolkit, which we've mentioned, is one that's really good for investors, and probably doing a super health check using our online ATO systems can help you stay on top of your super. So it's a good idea to do that when you lodge a tax return. Only takes a few minutes, but make sure you've kind of all your super details are up to date as well.
We make use of that super history and things inside the MyGov account, like so much. It's such a good tool for people. It makes things so easy. So I'd encourage everyone to go on and check that out. Absolutely. So, okay, we've talked a lot about property, about deductions, about scams even. Pretty much we've tried to cover as many bases as possible in this 45 minutes or so, Rob. What's the number one thing you want listeners to take away from this conversation today?
So I think the number one thing is if you're not sure if you can claim it or not, then check the ATO website for guidance or speak to a registered tax professional if you have one. Don't just claim and hope for the best. Make sure you get some advice from a reputable source beforehand. Penalties and interest can apply if we discover that the claim is invalid. So don't worry about that. Just make sure you only claim what you can at the start. And remember to keep good records over the years to help substantiate your claims, both for work-related expenses, but also for your investment income as well.
Yeah, great. Well, Rob, this has been heaps of fun. I know you did it last year with us, and the episode was a hit. So I'm so glad that you could take some time to join me here in the studio and talk all things tax.
Thanks, Alan. It's been great.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.